Good morning, everybody. It's May 17th. It is about 8:30 in the morning, and I just want to run through the charts of gold and the S&P 500 and what I think is going to unfold here in the next day or two. So let's just jump at it here. Here we've got the Kiko overlay chart. You can see on Friday we had a large sell-off in gold, triggered a lot of people's stops who were chasing the price up, and it spiked gold down to the 1220, 1218 level, and then it's drifted back up. This type of drift and this kind of angle is actually fairly bearish, and it went right into a resistance level. And this morning we're seeing gold move down. Pretty much every time it rallies to a resistance level, it shorts. So you can see every time it breaks down to a level, it's being or bounces up to a resistance level, it gets shorted. And that's pretty much where it keeps dropping to today. So we might retest this 1220. I'm going to show you on the longer term chart. I have a feeling we could go a little lower. I'm looking more around the 1200 area for gold, so I've canceled the possible setup to buy down here at 1220. I just feel there's too much risk. Gold's really rocketed up in the last few weeks, and it's kind of gone parabolic in my opinion, and I think we could get a very sharp drop back down. So right now we're just going to watch gold. We're going to let it kind of run its course, and we're going to go from there. So if we jump over to the daily chart, you can see we've got this large run up in gold, and I have a feeling we're going to see a sharp pullback more or less into a key support level, which will be somewhere right across here, the 1200 mark, maybe even a little lower through this noise right here through the middle here, which ends up going through some of this noise here, which will act as a support level. So we could drop down to the 1185, 1195 area, and it could happen fairly quickly. And then gold could be set up for another move, or it could just continue to go sideways a little bit before making a larger run up. So that's what I'm looking at right now. I'm not in a big panic to get into gold. This, like I said, this huge kind of run up is just picking up speed, and to me it's way overbought. It just broke the highs there last week. A lot of times when you break the highs, you get a sell down, and shakes a lot of people out. So that's where I think we're going to be doing here, is coming down to a key support level. So that's what I think for gold. A couple other little things is we've got this longer term cycle here. It's just about to top, so it will be coming down in the next day or so. The short term cycle is headed down, so it's going to put some downward pressure on today as well. And we did see a spike of selling volume on Friday. So a lot of times when we see selling spikes near after a rally, you kind of have to get ready. I call them get ready spikes, because once you see big sellers start to step in, it's usually an early sign that other people are going to catch on and start unloading as well to make sure they don't get caught in the downdraft. So that's what I'm looking for gold right now. As for the S&P 500, we are still short. We had a great trade last week. We've taken 2/3 off of our position on the way down. What I want to show here is this faint gray lines. You can see these gray spikes on the charts. There's all these gray spikes, and what they are is panic selling days in the market, and that's the S&P, or sorry, the NYSE selling volume. It's a ratio between buying and selling volume. So every time it spikes, and of course it, excuse me, sorry, it increases as the price goes up of the indexes, but every time we get these spikes, it's always pinned to market bottom. And what happens is we get these, you either get a big spike or you get a cluster and then a big spike. So you can see these clusters of, they're almost like get ready spikes of panic selling. People are starting to panic, and you see these mini waves of panic hit the market. And when you get a huge panic, that's usually when the bottom is done. It's capitulation selling. It's just everybody's freaked out. So you get kind of some get ready spikes, which happens in the top, and then eventually you get this great big spike here, and that flushes everybody out. So that's what we're seeing here. We saw these get ready spikes, and now we haven't seen a huge spike yet, but we've got more get ready spikes here. I think we could get one more flush down. I don't think we're going to break the low. We might come down and test the 1100 mark, maybe a little lower, but we'll have to just play that by ear. But we'll probably see a big spike in selling, and that's most likely when we're going to reverse directions and possibly just take a long position. So that's what I'm looking for there. On the 60-minute chart, here we can see we shorted the S&P pretty much around 1170, and it went right into a key resistance level. Volume dried right up as it rallied. Perfect divergence right into a pivot level. And we took some money off the table at 1155. We took some more off at 1127. And now we're getting a bounce up. We've got our stop set here at 1150. So with any luck, we'll see. Let me just redraw here. With any luck, there will be key resistance around the 1150 area. So we're hoping, worst case scenario, we get a rally close to it, and we get the flush down, and it'll test this area here. We might get a dip through it, which will really cause some panic selling, and we could look to go long here for a much larger, the next rally up. So that's what I'm looking for right now. Right now we're just short the final third, and we're going to, if it goes above 1150.75, then we're going to cover. If not, we're just going to continue to ride down, and once it breaks this low here, we'll move our stop down to probably the 1140 area, somewhere right in here, just to protect ourselves. So that's what I see right now, and I'll talk to you guys later. Bye bye.